Lovely to see you. A quick
Jaideep.
introduction to my guest, folks, because he's a bit of a unique bird, if I may call him that. It's very rare to have, panelists with us who had extensive experience both as an LP as well as a GP. And Puneet, of course, has played both roles with aplomb. For the last 2 years plus now, MD and CEO of ICICI Venture, part of the ICICI group since, I guess, almost the turn of the century, and rose to become Deputy Managing Director at ICICI Pru Life Insurance before taking up the current assignment. And before that, he spent some time with JP Morgan and ISEC, and of course completed his studies back at IIM Lucknow. It's a privilege for me to know him personally as well, and it's a real delight, Puneet, to have you with us. Thank you for taking out time.
Thank you, Jaideep. Thank you for the kind words.
We've had multiple guests here with us today talking about, the mood of the event, if I can summarize it in one word, is close to euphoric. Definitely very optimistic. And what I am picking up from our guests and speakers is that the industry is growing. There's more and more money being invested. It's broadening with different types of capital coming in. And it's also deepening with more and more specialized finance coming into play as well. As someone who's participated and watched this industry for as long as you, give us, what are you seeing?
You're absolutely right, Jaideep. I think if we simply look at the numbers first, because you and I may have some views, but numbers don't lie. And that data has been sort of spoken about during the day. Investments in the Indian alternate assets industry, which already were pretty decent, about $47-48 billion for each of the last 10 years, had already risen from about 10 billion a decade ago. In 2021 was 77 billion. Right? That itself shows you that the industry is coming of age, the relevance and the importance that it has. Along with that, if you also look at the kind of different kinds of strategies, different kinds of funds that have come today, I think there's a lot of diversity. From an era where there were only perhaps a couple of types of funds, today if we speak to different kinds of LPs, whether international, whether domestic, the reality is that different entities have different kinds of risk profile, different kinds of objectives, different kind of return expectation, and different kind of horizons. And that is why having different kinds of strategies, different kind of products obviously makes a lot of sense. And today that is being provided. Along with that, I think one more very important aspect that has happened is that the domestic LP community has come of age. And, they bring a different perspective compared to the typical global kind of LP. So I think all of these things have played a very important role to ensure that the industry is both deepening and widening. Of course, the industry itself has played a very stellar role in helping the Indian economy, in helping the Indian industry to grow. Today, the industry plays a very, very important role in the development of the economy itself. And I think it has now been acknowledged widely by the government, by the policymakers. And to that extent, I think the industry can pat itself on its back. But the other good thing is that I think the industry has done also a pretty good job of generating good returns appropriate to the objectives of underlying funds, and actually has demonstrated that by very good exit track record also, especially in recent years. So I think all of these, if I put these things together, augurs very well.
Yeah, that's great to hear your thoughts here. But Puneet, ICICI Venture itself has been, I dare say, one of the pioneers in the ecosystem. And over the years, you had a real estate vertical. There was a distressed or a special situations fund. There's obviously been the growth fund, early stage now, kind of being looked at as being part of the portfolio. So when you talk about broadening and deepening, also tell us a little bit about, what's your vision for ICICI Venture itself?
Jaideep, at ICICI, we think of ourselves as a group which has a very important role to play in helping the Indian economy, helping the Indian corporate sector, indeed helping the Indian consumer as well. And we feel very responsible towards playing that role in a manner with the right governance and with the right kind of transparency. ICICI Group, of course, has been in existence for a very, very long time and also has the benefit of understanding ground up the Indian culture, the Indian sensitivities, and also the Indian way of doing things. When we started this business, we realized that when we talk to different kinds of investors, there are entities which have, as I already mentioned, different kind of risk appetites, different kind of horizons, different objectives. In order to, actually the idea came from there, that in order to meet the needs of the diverse kind of investor sets, it is probably good for an institution like us to have the ability to offer different kinds of products, different kinds of strategies. And hence, perhaps we are one of the very few players in the industry which does have these 3 or 4 different kinds of business verticals, as you spoke about. The idea obviously is to stay in tune with the times and also to offer whatever is the requirement, whether from the investor perspective or from the Indian economy perspective. So to that extent, of course, as you also said, we also, in line with whatever is happening in the industry, we also wish to diversify more. We also wish to scale up more. We want to achieve both depth and width. And we are working hard to do that in line with whatever is the requirement.
Fabulous. Now, Puneet, let me get you to put on your, dare I say, previous hat as an LP. And you spoke about the reputation that ICICI has of governance and transparency. But as a domestic LP, what would you sort of advise to GPs who are today raising money in terms of what are the things they should be doing to attract investments, from leading LPs here?
Having been on both sides of the table, but today being a GP, you're putting me in a bit of a spot. But, jokes apart, look, the reality is everybody, and I think during the day, a lot of speakers have spoken. There are a lot of very, very eminent people here today. I just want to reiterate that obviously the most important thing is performance. End of the day, every alternate fund, every GP is performing a role in order to deliver the best possible outcomes to its LPs. Ultimately, all of us manage money in a fiduciary capacity, and that becomes clearly the most important objective. Having said that, I think as a domestic LP, certainly there are certain other, I would say, requirements, certain other considerations which also become quite relevant. And I think the industry is starting to understand and sort of realize that. More so, I think it also is because of the fact that today the domestic LPs, and I understand there was a session around that during the day, but having been a domestic LP, I can say that today the appetite of domestic LPs is increasing quite rapidly. It is already evident in the numbers. If I look at the kind of numbers that we are seeing, the kind of investments that are coming in Indian alternate asset fund, domestic LPs, I think, have generally always been important. But in the early days, perhaps in the early 2000s, it was predominantly few banks. Maybe, of course, LIC has always been very significant. SIDBI has always been very, very significant. And maybe, some HNIs. Over the next few years, we saw the HNIs, family offices really coming of age, and there was a good panel discussion around that and have become very, very relevant. But I think the other big segment which has emerged over the last decade is actually the private insurers. Private insurers have entities which do have long-term liabilities and hence also have the need to look at long-term assets, number one. Number two, from the perspective of insurers, less than liquidity, it's actually the governance, the transparency that is more important. And I think that is something, at least as an LP, I always used to look for that as a very, very important factor when I was looking at any fund or any GP for that matter. And I think that's a very big learning for us. I think some of the steps that are being taken today by SEBI, etc., in order to bring more transparency, whether it's in terms of the charge structure, whether in terms of the kind of returns, are very, very welcome steps. And I personally feel we can perhaps even go beyond that. Also, I think there are certain specific requirements in terms of the underlying asset class, asset pools, etc. So, for example, there are insurers as per regulation which have to look at certain minimum kind of investments in certain asset classes. It could be infrastructure or something. I'm just giving an example, and hence that itself creates opportunities. At the same time, the risk appetite, while in general for an asset class like alternate fund is expected to be high, for typical insurers, the risk appetite to that extent is relatively less, and hence they do need the comfort of appropriate governance structures and the comfort and the confidence that the entities is going to do a reasonable job and keep them updated, keep their interests in mind. There are also some specific requirements in terms of investing domestically. That is
Sure.
written in the regulation itself, and something around the size of the fund, the size of the underlying entity. But if I put all of these together, I think commonsensical things are very clearly, of course, in addition to performance, which is absolutely the basic, the need for transparency and the need for efficiency is what is perhaps the most relevant part. At least I personally feel that good progress is being made in that direction, but clearly a lot more can also be done.
Sure, Puneet. And I think also, with the government putting the review mechanisms in place to further, I guess, right size and simplify regulation, that will also help. And obviously, there's a continuous process to drive more transparency through the sector, which always in the long run is beneficial. But as just keeping an eye on the watch, we'll soon be running out of time. So I do want to ask you a couple of bits and pieces, looking a little bit into the crystal ball, right? We've got the emergence of what is popularly known as Web3, right? And part of that is cryptocurrencies and so on, but it's a much broader construct. And a lot of investments globally are now going in to those kinds of ventures. A big part of those, those types of companies is kind of around fintech. With your, I guess, parentage and shareholding from a bank perspective and so on, any particular views that you folks have developed in the firm with respect to Web3? Are you looking at any investments there? I know you can't tell me specifically, but just from a broad perspective.
At a general perspective, if I have to give, it's clear that there is significant traction globally in some of the things that you spoke about. Having said that, there is also the perspective within India that there is still regulatorily not enough clarity in some of these things. While as alternate asset funds, we do want to stay ahead of the curve, we do want to be proactive, we want to evolve quite rapidly in order to ensure that we meet the requirements of both the investors as well as who are raising capital. We also have to keep an eye on this. But having said that, very, very exciting opportunities are opening up since you spoke about the general fintech space. At ICICI Group, whether at ICICI Bank or in the insurance companies or in securities, etc., I think the entire group is very, very proactive in trying to seize certain opportunities, always, as well as create opportunities. So across the group, we work with a lot of fintech entities, and we see a lot of exciting developments that are happening. Some could be things that are already now in public domain. People are already starting to see the fruits of that, but there are some that will come over time. So we as ICICI Venture are sort of quite glued onto that, and we want to see how we can also use that understanding, use that connect in that ecosystem to try and see if we can bring opportunities for our investors. End of the day, I don't think we should, whether we as ICICI Venture or the industry, can claim to be entities who can lead this kind of innovation. I think the innovation comes from the industry, from the entrepreneurs. Our job, honestly, is to give wings to them, is to help them think, to help them scale up, to help them reach perhaps global standards. And that is what we will attempt to do. At the same time, our responsibility is very much to our LPs. And for example, in ICICI Venture, we have very diverse set of LPs from global sovereign funds, pension funds, development institutions, to a lot of very, very relevant and important domestic LPs, insurance companies, banks, etc. So we have to ensure that what we do takes care of their interests. Our primary responsibility is to them. And one of the ways of taking care of their interests, obviously, is to ensure appropriate exits as well. And the reason I'm bringing this at this juncture also is that when we talk about some of these, new age kind of thing, we also have to keep that aspect in mind. And of course,
That's
today
true.
The good thing is that the exit environment itself has become very, very diverse. We spoke about diversity in the kind of offerings that are there, but today I think the exit environment has also become very diverse, not just because of the fact that the markets have done well, and a lot of speakers have spoken about that, but also the fact that different kinds of opportunities are emerging, which help you to exit. So just giving our own example at ICICI Venture itself, post GFC, we would have done about 70 exits, more than $2.5 to $3 billion across different verticals and funds. And you have executed diverse strategies. Sometimes one feels that the typical strategy is only, maybe capital market or strategic. But I think there are many diverse strategies we've executed. And even more importantly, across both good and bad cycles. I think that itself gives the confidence that we can deliver appropriate outcomes to investors. And in fact, even for the industry, I personally think 2021 has been a landmark year. It probably, you can call it a structural shift in the industry, where I think about $42 billion of exits were done by the industry compared to maybe about 15, 20 in the prior year. So I think all of these, if I put these things together, very, very encouraging trends, a lot of opportunities, but at the same time, we have to be very responsible and wear our hat in a manner where we take care of the interests of both the LPs and of course also the entrepreneur sector.
And that's a wonderful place for us to wrap up our conversation, Puneet. I'm afraid we are flat out of time. 20 minutes have just sped by. But, in some ways, you're also sharing that the more things change, the more they remain the same. Transparency, good governance, good practices, an experienced team, some of the basic building blocks which attract LPs are still the same. At the same time, you spoke about, continuously evolving regulations and how they're enabling, new, more scaled investments to take place, and of course, some of the new areas. And we have to proceed with caution, of course. Thank you ever so much for sharing your thoughts. It's always a pleasure to have you with us. And I wish you all the very best as you go into 2022 and beyond. May ICICI Venture continue to keep, powering ahead. And with that, I thank you and hand back to you, Kavya.